What's up, guys? Welcome to the Crypto Savvy channel. I'm Craig, and we're going to be going over the markets, starting with the DXY, going on to the 10-year yield, and then, of course, Bitcoin. We're going to take a look at a chart that I posted on Twitter, which got a lot of hate, which all my tweets do right now, and so do my videos. But what happened last time we seen all this hate, right? It's usually signaling major FOMO, major top, people believing we're going to new all-time highs, when in reality, I don't believe we are. As I've been talking about for a long time, the big market structure has not changed. I think we're looking at the biggest money grab in history. Oh, before we go any further, make sure you guys take a second out, smash that thumbs up. Let me know what you think in the bottom below. I pretty much know what most people are going to think, but I'm curious to hear your thoughts on what you think the markets are doing right now. As you guys know, I think the biggest opportunity of our lifetime is coming, and it's not here, and 15.5 wasn't it, in my opinion. Of course, none of this is financial advice. But guys, I think we're going to be able to buy cheap houses, cheap cars, and very cheap stocks and crypto by the time this bear market's over. I do not believe it's over. I do believe this is still just a bear market rally. Obviously, I thought it would end in sometime September, October. It's taken a little longer. But when I made that September, October call was 2 years ago. So if I'm off by a few months, you know, who cares? What I'm looking for is the true bottom, which I believe is not here yet. We're going to take a look at what's going on. Let's start out with the DXY. As you can see, the DXY, we got our bounce around where we expected, the 105 area, which was also the 0.382 fib, right? I do believe we're possibly going to get up to this 107. Once this 107 breaks and holds as support, my next target is 109. After that, 115. If this takes a while, this could drag the bear market out a lot longer. I've explained a lot of times, and a lot of people just don't get it, that when the markets crash, the dollar rises, the dollar gains power, market prices get low, use that high dollar, and they get back into the low stocks, low markets, and make a whole lot of money over decades to come. I think this crash is going to be a big crash. I think there's going to be awesome deals. Like I said, people are going to be liquidating, losing their houses, cars, everything else. Things are going to get very cheap. Anyone that was around for 2008, you've seen what happened back then. I think this is going to be a lot bigger. But again, it's not doom and gloom, guys. This is the hugest opportunity of our lifetime. And so far, I don't think anything has changed with that. I do think all markets topped out over a year ago. We're in a huge bear market rally. People are FOMOing in, giving their money to the big boys. The big boys like FOMO because that puts money in the markets and they can take it out. So as people are pumping money in, they keep selling their shares, right? Or their coins or whatever. As it goes up, they're selling into that. And then it comes back down. They stop for a little bit. It comes back up and they sell into it. That is how they liquidate, get rid of their crap, pawn it off on you, and then you get a bunch of bag holders, right? But as you guys know, I think this is the biggest opportunity of a lifetime, because I think these markets are going to drop and drop hard, and I don't think it's going to be a fast recovery like people think the V-shaped recovery. I think it's going to be a multi-decade recovery. But if you catch it at the bottom, you're not going to be at losses. You're not going to be at a loss for all them years. Again, if I'm correct, which I have not changed my view, nothing here has really told me to change my view. Let's take a look at the 10-year yield. So the 10-year yield, if we do drop, if we go past this, well, we're going to put this trend line, and this trend line is ascending, so it will get higher as time goes. This is the daily time frame. But if we get past that 4.38 and start opening and closing dailies below there, then I might think maybe it's going to go down a lot more. But as you guys know, I think the mortgage rates, 30-year mortgage rates, will be well above 10% before this bear market is over. So once it starts getting around there, then I'll start looking for possibly things bottoming out. But we got a long ways to go to get down there. That doesn't mean necessarily a long time. It could happen quickly. Let's take a look at my sponsor, Prime XBT. They do sponsor the channel. Definitely check them out. Use my promo code SAVVY25. Will get you 25% off your trading fees, and SAVVY50 will get you up to a $7,000 bonus. You can trade crypto, Forex, gold, silver, oil, S&P, Dow Jones, everything, all from one exchange. definitely, they don't trade against you like a lot of the other exchanges. Take a look at the difference between an A book and a B book exchange. But anyways, definitely check them out if you haven't already. If you follow me on Twitter, even if you don't, you can follow me down below. I'll leave my Twitter link. I will be posting a promo code. I'm just going to randomly post it out. It'll be a series of letters and numbers. And if you have a Prime XBT account, you go to your main right here. I don't know why that isn't showing. You go to your main account, and then you go into where you put your promo codes. Type that in. It'll only go for the first person that uses it. So make sure your Twitter notifications are on. And once you see that, you can put it in your promo code section. It'll give you $200. You can't take out the $200, but you can use that to trade. So let's say you take that 200 and you make 500. You can withdraw the 300, the winnings, right? So doesn't cost you anything. Definitely keep an eye out for that. Later on today, I will be posting that. I did one yesterday. I'll do another one today. Probably another one tomorrow. This is a Twitter post. Well, I put this on a Twitter post, right? Showing you Bitcoin often likes to repeat itself. Now, a lot of people try to find the lines exact for none of the cycles in Bitcoin have ever looked the exact same, but their fibs often line up beautifully. What I wanted to show here was, you can see this, I have circled over here, the 0.382 fib, and then you can see over here, same thing, I have the 0.382 fib circled, and as you can see, let's zoom into this one. We had our high, we had our big drop, we had a rally following down to the true low, right? And then once we hit that true low, we came back up to that 0.382 fib, and we got above it. You can see I have it circled here. You can see we got above it. Pretty much what Bitcoin is doing right now. And if you measure how high it got above that 0.382, it was 4.72% before crashing down. And notice it came down, retested the lows before actually crashing hard and making the true bottom, right? Let's go over to where we're at now. Now, a lot of you guys obviously are going to throw hate because a lot of people just want to buy something and hold on to it and get rich. Of course, who wouldn't want to do that? The problem is that's not how markets work. Markets take the most money from the most amount of people, right? So there are a few winners and a lot of losers. That goes along with what I'm talking about with the biggest money grab in history. I don't believe people understand what I'm trying to tell you here, that this is no sign of going to new all-time highs, in my opinion. Let's look at where we're at. We got above the 0.382, just like last time. Now let's see how high we got. About 5.5%, right? Now, here's another thing I wanted to point out. Let's get these fibs out of the way and put a Fibonacci extension on. We'll go from the high to the low to this bear market rally, right, that we had right here. Let's take a look at that. We put it from the high. This will show us, if this is the top here of the bear market rally, where we could be headed. So we go from the top to the low to the bear market rally top, right? And if we have to extend it. So let's put it over here so we can see. We got down to that 0.618, and that was 31,000 or 3,100, a little over 3,100 is where we bottomed out on the 0.618. Now, if we do the same thing over here, now the measurement I'm going to take is if we're topped out, although we could get higher. I'll take a look at that in the smaller time frames, right? But let's go from the top to the bottom, right? To the top of the rally from where we're at now. And that would get us down to around, if it went to the same spot from here, around 49,000. As you guys know, my target for the true bottom of Bitcoin is still 3,500 to 9,700. That has not changed. Nothing has changed in my opinion yet. And it's not just being a perma bear, right? It is because of market structure. I cannot stress that enough. It's market structure, guys. So let's say we got up to that 42.44. Then where would that put the bottom? About 8,800. Let's say we got to that 0.618 at 48.5. That would put the bottom around around a double bottom, right? If we were able to get up that high. Right now, we're going to take a look at the smaller time frame. Let me get in here, right here. So this was from Tuesday's video, right? I said if we got above here, there'd be a possibility for a long. I need to see at least a 4 hour, preferably a daily, close above this trend line, right? Until then, this is looking like a major rejection. But let's say we, come back up, get above this trend line. If we start opening and closing at least 1 4 hour, preferably a daily for me, depending on how it goes, I will put in a long there with stops below the trend line, right? And I'll long it to approximately this next fib level, which we never hit in the last cycle, right? It rejected here before hitting this, but that would be about 42. But if we did get here, I would put in a long and then just trail it with my stops, right? Meaning if it got up to 38, 39, I'll move my stops up to 37.5 and then so on and so forth. That will basically just be like a hedge, like a small short-term long, right? Because what I'm truly looking for is massive short opportunities because I believe this market is going much, much lower. So anyways, that's what I'm looking at now. As you can see, we are back inside this rising channel. So if this was just a bear trap, which a lot of times bear traps look just like this, a wick above the trend line, right? We could take a measured move. Let me get my trend line out here. Take a measured move from here. And then where would the... So if we stay under here and this becomes major resistance, we don't get back above, it'd probably be a good area to short around 36,000-ish, a break of 36,000, 35.95. And then this will probably become resistance. Might get some wicks above, but coming back down. But once it comes back down and breaks this bottom, depending on where, because this is rising, but that would get us at least 17.5, right? At least 17.5. Breaking this, and that area would be somewhere between, if it happened quickly, 26.8. If it would take, a month or 2 or 3 or 4 or 5, 29,000. But keep an eye on that. Again, unless we get up here, hold support, then you look for the fib at 42,270. But as I showed you in this chart over here, it never reached that 0.5 fib in the bear market rally right here, right? Let me put that back on there so you can see it. Fib retracement right here to right there. As you can see, it didn't even get halfway. So just something to keep an eye out for, guys. I do believe the biggest opportunity of your lifetime, also the biggest money grab in history, is coming very, very soon. Be careful. Be cautious out there. I love you guys. Make sure you smash that thumbs up. Leave your comments below. Subscribe to the channel if you haven't already. I will see you in the next video. Have a great day.